Hi guys, this is Rudy for Investor Investor. Yesterday I made a YouTube video and I talked a little bit about a trailing stop and how you could possibly trade Occidental by way of an example with using a trailing stop in order to protect your gains. Some of the people obviously are sitting on nice big fat gains right now because they have impeccable timing, which I don't. So a number of people who are in our immediate audience managed to acquire some Occidental shares at $8, $9, $10, and obviously today Occidental is trading at about $16 or thereabouts. So a few people asked, hey, Mr. Oxy, can you show us this in an online brokerage platform? So I thought what I would do is I'll just log in. This is TD Ameritrade. So let me show you sort of how this works in real time with an actual trade. So I want to sell. It's asking me how much do you want to sell, and I'm going to say I want to sell 1,000 shares, and I want to sell Occidental, which is the equity that I want to trade. So right now, maybe I need to move myself around a little bit more so that you can see better what's going on in the background here. We see Occidental is trading at $16.07. Obviously, I have limits in terms of how much money I am prepared to lose. And for the sake of this example, let's just say I was lucky enough to purchase Occidental stock for $8 per share. It's currently trading at $16 per share, so I'm up 100%. So it's asking me, hey, Mr. Oxy, what do you want to do? So on the order type drop down here, I have a number of different choices. I can select a limit order, a market order, stop market, stop limit. So basically, a market order means if I sell it right now, it's going to sell at $16.07 or thereabout. A limit, I can put in a limit price in terms of what I want my trade to be at, or otherwise I can put in a trailing stop percentage or a trailing stop in dollars. So for the purposes of this example, let's use the trailing stop as a percentage, and then TD Ameritrade will say, how much exactly are you prepared to lose, assuming the stock goes down? And I'll say 3%, right? So now what I'm doing is I'm selling 1,000 shares of Occidental with a trailing stop of 3%. Now, what happens is one of two things, right? If Occidental goes from $16 to $17, $18, $19, $20, nothing happens. This doesn't execute. On the other hand, if Occidental were to decline by 3%, I'm exiting the position, and at 3%, let's say at around $15.50 or so, I exit the position. I bought the stock for $8 or $9, so I take my $6 or $7 as a gain, cash it, and obviously then I can do whatever I want going forward. Then it's asking me for how long. Oh, by the way, I can, as a stop parameter, I can put in anything I want. I could say if Oxy goes down 10%, for instance, $1.60, or if Oxy goes down even 1%, I want to exit my position. But let's just say I want to exit the position if Oxy were to go down at 3%, it's going to execute a trade and get me out of this position. For how long do you want this instruction to stay in place? So firstly, as soon as I put in the 3%, it tells me there that 1,000 shares executed at 3% is going to generate a sale for me when it executes the trade of $15.578 based on today's price, which is $16.07. Now it's asking me, for how long do you want to make this order in place for? I can say today, until the end of day today, and when the market closes at 4 o'clock, my trading stop order will just cancel automatically. Or otherwise, I can say GTC, which is good till canceled. And if I say good till canceled, you can see that the date that it populates for me over here with a little calendar next to it gives me some choices. This gives me up until April 21. And the maximum period that I can put it in for is 6 months. So I can say I want this executed by June the 2nd, 2021. If I do this, the trailing stop sell order in my example will just sit there until June, unless there's a corporate action in between. So if you get a dividend or something like that, or there's some other corporate action, TD Ameritrade via Oxy will just automatically cancel my trailing stop order and send me a notification, and then I can institute the same order again. Otherwise, what I can do is I can say, you know what, I don't have that long a window that I want to leave it open for. So I'll take a look again and see sort of what happens by December the 31st. So I'm going to make it good for this month, for example. So GTC is good till canceled. And then it's asking me additional details. It says, what exactly is it that you want to sell? So I can have a default, my standing method, or otherwise I can say I want to sell the first stocks I bought. They must be first out, so it's FIFO, right? So, but maybe my first stocks that I bought was Occidental at $58 per share. So I don't really necessarily want to take a hit on that. So I might say I want to sell the last stock that I bought first. So in other words, I want to sell 1,000 shares that I bought recently for $8, for $16, should Occidental pull back a little. Otherwise, I can say I want to sell the ones with the highest cost first. So in the example I just used, that would be like a $58 share. I want to sell first. Or otherwise, I could just say sell the cheapest ones that I have in my portfolio first. So I might have bought some Occidental shares at $8, $9, $11, or whatever. And let's say I bought 500 at $8 and 500 at $9, then my 1,000 shares that I'm selling here is going to be filled. The trade order that will execute will be 500 at $8 and 500 and $9, and let's just average it out, right? So in other words, I do that and I say, let's do the last in, first out. We'll sell the ones with the lowest cost. TD Ameritrade has an interesting little added feature here, which is use my tax efficient loss harvester. So within TD Ameritrade, they have a unique and very cool technology called Sink or Swim. You can use that too in order to maximize your tax loss harvesting. For the sake of this example, I'm just going to say, let's do the last in, first out. In other words, I'm selling my cheapest shares in Occidental first. Then it says review the order. If I click review right now, which I'm not going to do because I think it's pretty self-explanatory what happens now, it will just show me on a review everything that I've entered in this particular screen here. And then it will say place the order or place the trade, yes or no. And then once I accept it, then the trailing order will just sit there, as I mentioned, until December 31st, or a date not more than 6 months in the future that I had selected as my trading window for good till cancel GTC. So I hope that helps a little bit. Obviously, the drawing here is a little bit better than mine. Here you can see some of the charts I was trying to replicate yesterday in terms of my explanation. And as you can see, the drawings are absolutely picture perfect the way I drew them on my blackboard, right? So anyway, I hope this helps. It's possible that your brokerage, your online brokerage functionality does not have the capability of entering a trailing stop. If it does, and you actually want to trade the equity positions that you have safely, when you have a nice big fat gain, you can protect those positions by plugging in a trailing stop. One of two things will happen, as I mentioned. If the stock keeps going up, 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 and it never drops in one single day, for instance, below 3%, or over a period of time, it doesn't go down by 3%, it just keeps going up, in which case you're very fortunate. The trailing stop will do absolutely nothing. It will just sit there. On the other hand, if Occidental were to pull back, in this example, by 3%, your trailing stop order will execute at 3%. And once the order is executed, you have sold, in my example, 1,000 shares of Occidental at whatever the price is at that point in time, less 3%. So just to clarify, if Occidental goes to $20, then if Occidental were to pull back at that point in time, 3% from $20, then I'm exiting the position at that point in time. So 3% on $20 would be about 60 cents. Then I'm selling at $19.40, right? You get it? The trailing stop sits there at 3% and it trails the stock all the way up if the stock is going up, 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 up. And eventually, somewhere along the line, it's going to go down 3% or more in one day. And boom, your trade order executes, the sale happens, and whatever your profit is at that point in time, you can bank and book. So I hope that helps because obviously showing you within the technology platforms is a little bit better than what I was doing yesterday. I hope that's beneficial. I hope it clears up any confusion that I might have created with the video yesterday. So for now, this is Rudy saying keep well, stay safe. Don't forget to click subscribe if you haven't subscribed yet. And thank you very much for watching. I will be back soon within the next day or so with my feedback from my Occidental Investor Relations call, which is happening a little bit later today, this afternoon. Talk to you soon. Thanks for watching. Bye-bye.